So, namaskaram, ladies and gentlemen. So, as you have seen from the thumbnail, this is the super quick revision of audit of items of financial statements, where we are touching upon all the complicated points in this chapter. And I will have a chart note with me where everything is written clean and crystal clear, which is visible for you. And this chart, I'm giving it for free. Everything is there. You can take it from the Telegram channel. The link is down in the description. Please take it and please be there. Like, I'll upload these kinds of short notes for all the chapters. So like see revenue, cash, trade receivable, everything is there. So you can take it, you can zoom it and you can study it from your phone or take printout, whatever it is, you can do that. So let's go directly start with this chapter. We are focusing on the important areas of this chapter. So if you are planning to, if you had a plan to skip this chapter or you are not understanding this chapter, study it here, because from your book, if you study, it is just written not in the structured format. Here I have structured it through lines like charts so that you can easily understand. And ICA's language in the book is very complex. Here I have used the same language, but I've put the preposition so that it will be very easy for you to understand everything. And I've put the memory techniques for whatever things possible, all these things. So without wasting any time, let's directly go to the first topic, that is share capital. Don't just think that you can take a screenshot of this and notes and study yourself, because a lot of areas I have used small abbreviations. So just watch this video in 1.5x and then you can you'll know wherever these abbreviations are. So first is, so you are going to audit a company and the company's balance sheet, there is share capital. So how to audit share capital? What are the general audit procedures? Generally, these procedures you will follow. First thing you need to do is tally. Tally the year-end share capital balance, current year's end share capital balance with the previous year's share capital balance, audited financial statements balance. So last year's closing and current year's closing, if there is any change in the share capital, that means current year if a new share is issued or old share buyback or anything is there, for that you have to check. So first tally, both are the same. If there is a change, if no change, if first of all, if no change is there, like last year's closing, current year's closing, no problem, share capital, no change, then obtain a written representation from the company secretary that no share issue, nothing, share buyback or anything has happened in the current year. Just obtain a written representation. Then next, if there is any change, verify whether the current year and paid up share capital is within the limits of authorized share capital. Current year paid up share capital is within the limits of, it is below the authorized share capital. Then next C, that is certified copy. C, obtain certified copy of the resolution, board resolution, shareholders resolution, authorizing an increase or decrease in the authorized share capital or paid up share capital. If they are increasing in a share capital, decreasing in share capital, they will have a resolution. They, in a meeting, they will decide we are going to increase the share capital or we are going to decrease the share capital. So in that, they will decide and pass it with a resolution. So obtain a copy of that resolution. Then next is, if any F for fresh issue. So you have to pictographically remember this thing, easy mnemonic. If in case of any fresh issue is there in the current year new shares has been issued. New shares, that is freshly issued, not the old shares not resold again. It's the fresh issue of shares is happening in the current year. Check the compliance with the Companies Act. Companies Act with the compliance regarding minimum subscription amount, minimum application amount, all these things, like whether all these things are fulfilled. Check compliance with the Companies Act. Then next, if shares are issued, no shares are issued at a discount. Make sure no shares are issued at a discount. What is their nominal value? They are not issued at their discount. Any amount below that. Make sure. Check if shares issued for cash or consideration other than cash. See whether current yearly any shares has been issued for cash or consideration other than cash. These are the audit procedures you have to check. Then SEBI, check the compliance with the SEBI regulations and guidelines. If it is a listed company and they are issuing shares, they have to follow SEBI regulations. So make sure if company has issued any shares, buyback anything, they have followed the SEBI regulations. Then MCA, Ministry of Corporate Affairs, verify the forms filed with the MCA. If company is issuing any share, they have to file certain forms with the MCA. Make sure they have filed it. Then increase in the share capital. If there is any increase in the share capital increase is there, verify whether company has accurately calculated the fee, stamp duty, all these things payable to MCA. Increase in share capital, when company increases share capital, they have to pay certain fees to the MCA and all, stamp duty and all this. Make sure that has been properly calculated and paid. So these are the general audit procedures you have to follow when you are auditing a share capital. Make sure this can be a 5 marks question. So at least 6 points keep in mind. Then in specific cases, and now we are going into specific cases. For example, if shares are issued at a premium, nominal value is 10 rupee, they are issued for 15 rupee, 20 rupee, whatever it is, premium money, securities premium. In that case, what should the auditor do? Make sure transfer the amount to securities premium account. That is that premium amount, make sure it is transferred to securities premium account. Then state the purpose to which such amount can be applied. That is, what are the purposes? There are certain purposes for which that securities premium amount can be applied. So you have to check whether that money is only used for that purposes only. So what are the purposes? The securities premium can be applied for following purposes. A question can come where a company issued shares and securities premium has been got and they have used it for certain purposes. And is it correct like that? So you have to check whether it is falling in these purposes, then it is correct, else it is wrong. Like that you have to state. So you have to remember all of this. So securities premium can be only used for these purposes. What are they? For issuing of unissued shares to the members as fully paid bonus shares. If there are unissued shares, issuing them to the existing members itself as bonus shares. For that purpose, you can put the entries on, take the things from the securities premium account. Then to write off the preliminary expenses of the company. Company may have some preliminary expenses. To write off that, you can use amounts in the securities premium account. Then to write off the expenses, commission or discount on issue of shares or debentures. When you issue shares or debentures, there may be some certain expenses you have to pay, or some commission you have to pay, or some discount you issued, all these things. To write off that things, you can use securities premium account. That is, securities premium account, whatever amount is there, you can debit that amount, and credit you can put this and write it off. Then to provide a premium payable on redemption of redeemable preference share, redeemable debentures. If there are redeemable debentures, redeemable preference shares, when you redeem them, you may, if you are paying any premium, extra money if you are paying, you can take it from the securities premium account, whatever premium you got from issue of shares, that is securities premium. Then for buyback purposes also, that is purchasing own shares, you can use it. Then what is auditor's duty in this? First auditor's duty is to check whether they have utilized this for whatever money is there in the securities premium. Like if they have issued shares, make sure securities premium account is first transferred to this. Second thing he has to check, they have only utilized that money for this thing. So auditor has to vary whether premium is transferred to securities premium account. Then application of this is only as per this purposes. Very easy. Hope you got the clarity. Next is, if shares are issued at a discount. You can get this notes from my Telegram channel. It is there. Go and take it. Then shares issued at a discount. That is, if shares at a normal value is 10 rupee, they have issued it for 9 rupee, 8 rupee. That is what we call discount. Normally, they cannot do that for all the cases. Like that is what he have said. No shares are issued at discount. We have to check. But there are certain specific cases in which a company may issue shares at discount. So company shall not issue shares at discount except as sweat equity shares, SES. To directly take this script, print and try to read it yourself, you may not understand what I've put the abbreviation. So I'm explaining all of these things, so it is very easy. So company shall not issue shares at discount except as sweat equity shares only. There are sweat equity shares, that are shares that are issued to the directors, employees of the company, those people. Those are called as sweat equity shares that a company can issue at a discount, smaller price. So company shall not issue shares at discount except as sweat equity shares. If company issue shares at discount in other cases, it will be void. Except one more exception is there, that is when debt of the creditors are converted to shares as per RBI direction. Company has lot of creditors. Company is unable to pay them. So RBI directed to convert that debt to shares. In that case, when debt of creditors are converted to shares, you can issue it at a discount. So basically, two cases are there here, but here only as per the RBI direction. Then penalty, that is if company issued any shares at discount other than those cases, penalty will be there. Amount raised through the issue of shares at discount, whatever money company raised through issuing shares at discount, or 5 lakh, whichever is lower, company has to pay as penalty. Plus company has to also do one thing, refund all the money is received plus interest at the rate of 12% from the date of such issue, also company has to pay us. That is, whatever money company has received, they have to refund all that money plus at the rate of, to that person at the rate of 12% interest also he have to give for that money received from the date of such issue. So this one you have to keep in mind. MCQ calculations may come. Then what is auditor's duty? Auditor need to verify the movement in share capital during the current year. Shares increase or decrease, all this movement he need to check. Then that no such shares are issued at a discount by reading minutes of meetings of shareholders or director meeting. He has to make sure no shares are issued at discount. And how will he make sure that? By reading the minutes of shareholders and directors meeting. So only two cases they can do. All the other cases he need to check. Whether company issued any shares at discount to creditors on debt conversion, all this thing. Like whether company has issued any shares to the creditors like this, he has to check that. Three things. Hope you got the clarity of shares issued at discount. So when you study from this chart, mindfully this entire share capital gets structured in one page like this. Pictographically it will be easy for you to remember. But you study from when your book or study material, it is scattered everywhere. You will not be able to recall. That is a problem with this chapter. You may think I'll listen to this and study from something else, bro. It is very hard. It's to retain that. That is why I made this chart. It took me hours to do this. Okay, then not hours, days actually. Then Issue of a sweat equity shares. Here we learned about sweat equity shares. That is another cases. Sweat equity share. These are 5 cases. General procedure, premium, discount, sweat equity share, reduction of capital. Then issue of a sweat equity shares. Shares issued by the company to director or employees at a discount or for consideration other than cash are called as sweat equity shares. So auditor has to verify 2 things. Whether sweat equity shares issued belong to the same class of shares already issued. Whatever company has issued like whether it is equity share, preference share, whatever, whether it belong, this equity share belong to that same class itself. The auditor has to check. Then whether following conditions are satisfied. This also he has to check. That is whether the issue is authorized by a special resolution. Sweat equity shares can be issued only by special resolution. So make sure special resolution is authorized or not. Then and whether now you have to see whether this special resolution specifies the number of shares to be issued, current market price of the share, consideration received, then classes of employees or directors. Whether this special resolution specifies these things, you have to keep in mind. Then listed shares, see if the issue is as per the SEBI regulations. If it is listed share, make sure if the sweat equity share issue is as per SEBI guidelines. So whatever SEBI rules is there, make sure it is properly followed. If not listed, then as per the prescribed rules. Simple. Then reduction of capital, that is company had this much amount of capital and current year company is thinking, okay, it's like lot of shareholders are there, let's cut down the capital now, let's take some shares back. That is reducing the capital. It occurs due to accumulated business losses are there, or doubtful asset getting bad, or company having excess paid up share capital than required. All these things. Excess paid up share capital is there, then they may reduce it. Or if company has a lot of business losses or doubtful assets are getting bad, all these situations, company may reduce the share capital. So what are the audit procedure to do that? First, verify the meeting of shareholders to pass special resolution was being held. That is to reduce the share capital. Shareholders, all the shareholders need to sit and do the meeting. In that meeting, they will decide we are going to reduce the share capital and they need to pass it through a special resolution. Make sure that meeting has been properly convened, properly it is held. Verify that first, such a meeting held or not. Then AOA, Article of Association, authorizes the reduction in share capital. Make sure in AOA it allows you to reduce the share capital. Make sure MOA, after the reduction, MOA is suitably altered. In the MOA, you have to alter and write now the share capital has been reduced from this to this. That thing you have to mention. Then examine the tribunal's order confirming reduction and verify the copy of order or minutes is registered and filed with the registrar. So if company is reducing the share capital because of a tribunal's order, tribunal has ordered the company to reduce the share capital. So in that case, examine that tribunal's order confirming reduction and that reduction. Examine the tribunal's order confirming reduction. Then and verify the copy of order plus minutes and verify that the copy of this order plus the minutes of the meeting in which they decided, that minutes is registered and filed with the ROC, Registrar of Companies. Make sure this minutes plus that order is filed with the ROC. Then examine that no default is there in the repayment of deposits or payment of interest. So this is regarding exam. So now itself you got 5 points. 1, 2, 3, 4, 5 points. Verify, examine. Then these are 5 points, separate points. I just wrote it this way too for pictographically to keep in mind. Then confirm that whether the revaluation of asset is disclosed in the balance sheet. Then confirm the words and reduced is added to the name of the company if required by tribunal order. Sometimes if tribunal says to reduce the capital, company reduce the capital. Then one more guideline is there. If company is reducing the capital like that because of the tribunal's order, sometimes in tribunal's order, tribunal may also mention you have to add the words the company Infosys Limited. Inside to that you have to add and reduced also. This one word also you have to add because your share capital has been reduced so that people let them understand. So whether make sure something like that is there, then whether it is done or not. Then check the compliance with the terms and conditions imposed by the tribunal on reduction of capital. Whatever terms tribunal has said, make sure it is complied. Check the registrar's certificate. Simple. Then vouch accounting entries recorded to reduce the capital and write down the assets. Reduce the capital, you will put journal entries right and to writing down the assets. So make sure that account journal entries everything is correct. So this is all about is share capital. Very easy, right? Then we have the reserves and surplus. Reserves and surplus is very easy. There are basically 2 types of reserves, revenue reserve and capital reserve. Revenue reserves are the profit. Basically, reserve is coming from the profit amount, right? So, revenue reserves are the profits that are available for distribution to the shareholders or for below purposes. Revenue reserves are either for distributing it to the shareholders or for using for the below purposes. What are the purposes? To supplement the divisible profits, then to finance an extension of business company wanted to expand, so for that they can use this money. Then for augmenting the working capital, that is for working capital needs, that can use it to strengthen the financial position of the company. Then capital reserve, it is not free for distribution to shareholders. This reserve you can freely give to the shareholders, but this reserve you have set apart for certain purposes. From your profit you set apart this for certain purposes, so it can be utilized only for certain limited purposes. Writing down the fictitious assets, you can use it for that. Then issuing bonus shares also, you can use it. An example of capital reserve, securities premium account, capital redemption reserve, all this can be utilized for the purposes specified in section 52 to 55 of the Act. So now you wanted to check the reserves. How will you check the reserves? In the balance sheet, an item is there called reserve. How will you check? What are the audit procedure? Very easy. Tally the opening balance of reserves and surplus to previous year financial statements. Current year opening balance, make sure previous year closing balance is the same. It is done to check the existence of reserves and surplus at the year end. Then trace the movement to surplus or deficit as per the P&L account. That is, check if current year P&L is added to the retained earnings, reserves. Basically, current year's whatever extra money is there, make sure that is surplus or deficit, that is properly added to the reserves. Whatever is there from the P&L, it is added to the reserve. The trace, the movement is correct. From the P&L, the extra reserve, extra money what we have from the profit, it is added to the reserves. Then trace the movement in statement of equity, SOE, statement of equity also. It is ensure it's reflected in the statement of equity also. That is, say this same thing. Whatever that extra money, make sure this thing is reflected in the statement of equity also. That is, this extra profit from the current year which we are taking into reserves. First thing we are checking whether it is taken to the retained earnings properly. Then we will also check whether that entry is coming in the statement of equity also. Then verify the board resolution regarding recommendation of dividend. To pay the dividend, board will pass a board resolution, the recommendation, how much dividend to pay. Verify that. Verify the shareholder resolution regarding declaring the dividend. So board resolution for recommendation of dividend, shareholder resolution for declaring dividend. Then securities premium, confirm whether company issued any shares above nominal value, that is at premium. If so, verify the board resolution. Then ensure that the securities premium account is utilized only for that limited purposes. Very easy, done and dusted. Now we will move into cash and cash equivalents. How to check cash? In the balance sheet, there is an item called cash and cash equivalents. How do you check that? Very easy. First, we need to check the existence and completeness assertion. That is, all the whatever cash is there, it is in the cash in hand, 10,000 is written. Make sure that 10,000 is there in the company, in the hands of the company. So that is checking the existence and completeness, completion. Then valuation, amount is correct. So first thing for that we will do is called a surprise check. Surprise check, that is, on that closing date, surprise we are going and checking. That is, not only on the last day we may do that, but not only on the last day of the year, check again after the close of the year also without giving a notice of auditor's visit. That is, on 31st March, you may go and check whatever cash in hand they are saying 10,000, make sure 10,000 is there in their thing also, drawer also. But they know that we will be anyways coming and checking on 31st March. So you can do it on some other days also. Just surprisingly, you do a surprise visit and tell the cashier, give me your cash book. So in the cash book, the balance, cash in hand is written is 8,000. So open the row and count and see whether 8,000 is there or not. That is surprise check. Then if more than one cash balance is maintained, sometimes a company a lot of laborers, lot of petty cash expenses. So different cash books may be maintained sometimes. One person may be handling some cash, other person may be handling another cash for different purposes. So if more than one cash balance is there, then that is example petty cash balance, or branch has a separate cash balance, or impress balances, then check all of them simultaneously. So shortage in one is not made good by transfer from other. That is, if company has same branch itself, imagine one cash book for normal things and one cash book for some other purposes. So simultaneously use one article to check this, at the same time check the other, or use other article to check the other cash book also. So that else what will happen, if here 10,000 is written in the book and here properly 10,000 amount is also there, but there sometimes 8,000 is written in the book, but 8,000 may not be there. So if you check here, then you are going there, by the time this guy will call him and tell, and here they will, whatever from some money from here, they will transport it to there, and there they will adjust it. So to prevent that, check all of them simultaneously. Then cashier has to be present when counting, else he will hold the auditor responsible. So when you are counting the cash, checking the cash, the cashier should also be there. Else in the book it is written 10,000, and when you count only 9,000 is coming. So if he is not present, he will say, auditor stole 1,000 rupees. He will put it on the blame on the auditor. So make sure he is present there. Then if rough cash book is kept, test it with the normal cash book and prove entries in both are correct. Sometimes rough book will be there, so test it both together. Then obtain bank reconciliation statement of all the bank accounts and understand the client's process and periodicity of bank reconciliation. If all the bank company has 3 bank accounts, get a bank reconciliation statement of all the accounts, and at different what all periods they are doing this bank reconciliation, like monthly or yearly or quarterly or whatever it is. Then ensure bank reconciliation statement is signed by the authorized person, finance manager, whoever it is. Then to check the valuation of cash, all the procedures you performed till now, whatever procedures here, all those procedures you have to do it there also. Plus, all the account holding the foreign currency in the is restated at a closing exchange rate. All the accounts which are holding foreign currency, company has some foreign currency with them. So all the company which are holding foreign currency on 31st March, make sure it is restated at the closing exchange rate. They may be holding the foreign currency as on 25th March. So like $10 are there. It is received on 25th March. So 25th March the rate was 65 rupees per dollar. So $10 into 65, 650 rupees may be shown. But on 31st March, the dollar price increased to 68 rupees. So actually the money should come, you should convert that 650, instead of 650, it should come as 680. $10 into 60. So make sure that is restated at the closing exchange rate. Company has done that. Then something called a direct confirmation procedure is also there for checking the cash balances. Directly you can confirm, like external confirmations you do. Similar here, you can do some direct confirmation procedures. Let's see what are they. So contact the bank and ask to confirm the amounts held in the current account, deposit account, etc. Do this for all the accounts at the year end. That is company's closing balance in the balance sheet. In the bank account, they have written 18,000 as a bank's 31st March closing balance. You can contact that ICICI bank, whatever bank is, and tell I am the auditor and I need the confirmation. Like normally you will tell the management and management will tell the bank and bank will give you the closing balance confirmation, something like that. Then you can trust that. For that, you have to do that for not only savings account, current account, FD account, all the any other deposit account, overdraft, anything is there, you can do that. Do this for all the accounts. So here you are directly confirming. That is called direct confirmation. You are getting that confirmation. Bank is giving that confirmation to you, like external confirmation and debtors. If there is any discrepancy in this, ask the company to invest it and investigate it. Investigate it. Ask the company to investigate it. Ask the company to investigate it and reconcile it. That is if any difference. Company balance sheet it is written as 10,000 and bank confirmation it is written as 9,000. So any discrepancy is there, ask the company why is it, investigate it and proper reconciliation, give it to me and change the balance. Then auditor should emphasize for the confirmation of 100% bank account balance. All the bank account balance he need confirmation. If no reply is received, that bank has not received replied for confirmation, then perform additional testing of balances, like agree the balance in the books of account to bank statement you will have. They are not giving separate confirmation. So, but bank statement like the closing balance, 31st March balance you will get. You check the books of accounts, financial statements balance with the bank statement also. Additional procedure. Normally here DCP means direct confirmation. You are getting confirmation from the bank directly. But if bank is not replying, then you can check it through with the bank statement. Then send the audit team member to the audit team member plus company or personal to the bank branch to obtain confirmation directly. So normally you may call or you may send a mail to get the confirmation, but they are not replying. So first thing you can check is with the bank statement. If that is also not possible, then you are auditing one article plus company is one employee. Both of them send them to the bank account and let them go physically go there, get the balances confirmation and come. So this is what all about cash and cash equivalents checking, cash and bank checking. So it is inventory. Inventory is actually a very easy thing, but majority of it consider that as a very tough thing only because you guys are lacking the structure in that. Oh, some background noises. Oh my god. Yeah, whatever. So you guys are lacking a structure in that. That is why you are considering inventory. So let's go with inventory. So inventory basically understand we have this much. We have to learn about the existence, then we have to learn about the completeness, then rights, then valuation. 4 assertions. Okay. So balance sheet there is an item called inventory. So now you have to check the existence of inventory, whether that inventory is actually existing. So what audit procedures you are going to do to check whether that inventory is actually existing? They are saying 10 lakh inventory is there. So you have to go to the company and check whether 10 lakh inventory is actually there. So what are these kinds of procedures you will do in that? First thing you will do is you'll check what is entity's plan for inventory counting. How are they planning to do the inventory counting? On which date or on what procedures what they're planning to follow? Oh, this background noise is too much. Yeah. So then next you will check the consigned goods to be segregated. That is in that inventory, 10 lakh worth of inventory, 1000 units of inventory. In that there will be certain goods which are consigned. So that you will segregate and keep it on the other side. Okay. 1 second. Charge is not there. Yeah. Then next you will participate in the inventory counting. Then you can check whether they are saying 10 lakh inventory is there, 10 lakh worth. So in the inventory counting, you can see whether 10 lakh inventory is actually existing. So these things you are checking to check whether that inventory actually exists or not. Then you can do the test counting. You can do the test counting, and test counting includes, because this alone they may ask us a question. That is why I'm saying test counting includes observing. This is observing. I with the observe, right? Observing the employees, whether the employees follow the agreed plan. Because for test counting, there will be a plan given to the employees for counting. Make sure that employees are following that. That is, observe whether employees are following that plan, counting in that order. Then you have to see whether there is a supervision on the count procedures. When they are counting, imagine there is proper, ensure that there is proper supervision is there on the counting procedures. Then make sure that all items of inventory are properly tagged. This is hashtag, right? I'm use this thing to make you remember it. So make sure that all the items in the inventory are, all the items of inventory are properly tagged. That is, imagine there is a mobile phone, not mobile phone. Imagine it's a bottle company. This kind of a bottle is there. So make sure this bottle has a tag. Like, see here, one tag is there, right? Similarly, inventory also there will be a tag where the quantity, the weight, the price, everything will be mentioned. Make sure that tag is there. Then make sure that amount is there on the tags, the value, the price, everything is there on the tag. Then may be alert at all times during the counting time. Be alert at all the times and make sure and search for empty boxes if there is any. They're saying 10 units, 10 boxes of inventory is there, but total value is 10 lakhs. So one box is 1 lakh. But in when you checked that box, only 8 boxes actually filled. One ninth box is half filled and one box is actually empty. They have put some stone in that. And just saying that inventory is there, and just to get more valuation, like to balance sheet, like to show more value in inventory. So that is why they're doing that. So make sure you be alert at all times and check for empty boxes. This is empty box, empty, nothing is there. Then you have to, if company is following periodic inventory system, then you have to do the counting at the end. Then if the company is following perpetual inventory system, then it happens at the interim dates. Because not your counting, they may be also be counting periodic counting, they may be counting at the end, and perpetual, then it happens at the interim dates. Then investigate the third party, investigate the inventory lying with the third party. Investigate the entity and inventory lying with the third party. Yeah. Then that things are over, existence is over. Now you have to check the completeness. That is 10, the company is saying 10 lakh, 10,000 1,000 units of inventory is there, and the total amount of that is 10 lakh. In the balance sheet 10 lakh is shown, 1,000 units. So now you have to check whether entire inventory, sometimes company may be some 1,005 inventory may be there, 1,005 units may be there, but 5 units they have missed. So it is your duty to make sure that all the inventory company has is actually is there in the shown in the balance sheet. So you have to check the completeness, whether all the inventory of the company is actually recorded. For that, you have to perform analytical procedures, and you have to perform purchase and sale cut-off test. Cut-off test means all the purchases and sales in the current period is only getting in the inventory, because when you purchase, the inventory will increase, and when you sell, the inventory will decrease. Only those purchases and sales of the current year is getting applied on the inventory. Make sure that. Then you have to reconcile the physical inventory with the perpetual records. Physical what is there with the records, you have just reconcile. Then reconcile the physical count with the general ledger. There will be a general ledger in that a closing balance of inventory is there. You have to reconcile that with the physical counting. Physical counting, what is the actual inventory you saw, and whether make sure that is there in the books also. Then inventory of the client held by the third party also you will have to reconcile. How much inventory is with the third party? Is it correct? And in the client's book, they are saying 300 units are with the third party. Like sometimes some of your inventory will be held in some other person's hand. That is what we call third party. So in your books, they are saying 300 units is there in the third party. But when you inquire to the third party, he is saying only 280 units are there. So that is what we call reconciliation. Then examine the non-financial informations also. That is the weight, everything of the inventory. Okay, that is how you check the completeness. Okay, Now you need to check the rights of the inventory. That is all the inventory that you are showing in your balance sheet. You itself own those inventory, right? That is what we call right. You have the ownership and you have the rights over that inventory. How will the auditor check whether the inventory is actually owned by the company itself? The rights is there on the company itself. For that, what procedures he will use? That is what here. So vouch the purchases recorded to documents. All the purchases to the documents, invoices, everything you can vouch. Then evaluate the consigned goods. Then check the existence of collateral agreements. Whether there are any collateral agreements are there, you have to check, evaluate its existence. That is, sometimes inventory you would have pledged somewhere and taken some loan or something. That is called collateral. Have you put the inventory as a collateral somewhere? Then review the consignment agreements. All the inventories that are consigned, review the consignment agreements. Then examine the evidence of ownership. That is when company bought 500 units of inventory from someone. We are the buyer, they are the supplier. So when the supplier in the bill, if our name, company's name is coming, then that means company is the owner. So check that. Examine the evidence of ownership. That is invoice in the name of the entity itself. Invoice entity's name is there or not. Then if inventory is held by the third party, obtain declaration from the third party or their legal heir, and it should be signed by the authorized personnel, confirming that inventory belong to the entity and are held by the third party. Imagine some of company's goods is with the third party. What is the procedure you have to follow? Call the third party and tell, I am the auditor, I need a declaration. Or call the company and ask the company to do this, because sometimes when you call third party may not respond. So through the company route, you can inform the third party, that is, I am the auditor and I need a declaration that 300 units of this company's inventory is with you. So if it is actually correct, third party will take a paper and write, yeah, I am this party and that company's inventory is lying with me, and 300 units of there at the value of this much, and the condition of inventory is good. Like that, they will give a declaration certificate. So that is your audit evidence. So either it can be from a third party or it's legal hire and signed by the authorized personnel. Okay. Yeah. Or there. Oh, this is not legal hair. Sorry. This is actually letterhead. Letterhead. What is a legal hair? This is letterhead. Okay. There is something called legal hair in another chapter. I missed it with it. Okay. Then you have to check the valuation. That is the amount of inventory is correct. That is, they are showing 10,000 units of inventory. Total is 10 lakh. You are checking that 10 lakh, whether that rupee amount is correct. What are the procedures you need to follow? So how will you check the value of raw materials? How will you check the value of work in progress? How will you check the value of finished goods? So how will you check the value of raw material? Ascertain that what elements of costs are included in the raw material. What elements of cost? When you buy a raw material, along with the purchase price, you will include the carriage, the transportation charges, all these things. So these are different elements of cost that are included in the purchase price. So when they are showing raw material is worth 1,000 rupees, in that 1,000 rupees, how much is carriage, how much is transportation? You check what are the elements coming inside that. So that is how you check the total amount correct. Then if standard, they are using standard cost, then how it is compared with the actual cost and how variances are treated. This one thing you have to check. If they are using standard cost, how the standard cost is compared with the actual cost, and if any difference is there, how it is being treated. You have to check that. Then test check the cost price with the purchase invoice. Inventory you are purchasing 1,000 units for 500 rupees. That cost price you have to check with the purchase invoice. Cost price and purchase invoice. Books same you have to check. Then if there is any obsolete or damaged inventory noted during physical inventory counting. When you are attending the physical inventory counting, there were 1,000 units were there, 900 units are in good condition, but 100 units, still some water damage is there. Imagine the inventory is like watch company, so watch is there. So 100 units of watch, water damage is there. So those inventory are basically damaged, or if any obsolete inventory is there, what should you check? Bro, 1,000 units are there, 900 units are good. So 900 units you can show it at the sale value itself, like whatever the value stock, you will show it at the stock value itself, like whatever the total cost of that, you can show that. But 100 units is actually gone, like half destroyed. So now that units is not even worth the cost. So for those 100 units, you will have to show at the realizable value. When it is sell in the market, you will get only half the price. So half price, because it is damaged, so half price only should come. So for those damaged goods, make sure it is written down to the realistic and net realizable value. Net, if they sell that damaged good in the market, it will, the cost of the good is say 300 rupees per inventory, but that is the cost itself is 300. So normally that cost figure it will come in closing stock. But since that inventory is damaged, if you sell it in the market now, you will get only 160 rupees. So show it at that 160 rupees. Make sure that is shown at that 160 rupees. So these things we are checking because value, we are checking the value, whether the 10 lakh total amount is correct. Amount is correct. For raw materials, you have to check this much. Then for work in progress, what are the things you have to check? Ascertain how stages of production or value additions are measured. That is for work in progress. An inventory is put in the production and it has not reached the final good stage also. So at 31st March, there will be a lot of things like that, work in progress. So you have to check at which all stages of production, how much our value is added. At the raw material value is 300 rupees per one unit. So when it goes to the second stage, raw material plus some other labor and all these things are added. So you got 300 rupees order value becomes 350 because labor's cost or some other materials you added to it. So that good sort of work in progress state. So for second stage, the value of that becomes 350. Third stage of production, when it goes, some other things are assembled. Imagine a car. First stage, just the steel body is there, not the steel, whatever metal body is there. But second stage, when it goes, tire comes. So tire order value is also added. Firstly, it was only 300. Then tires value 50 added. Then the third stage, the engine is added. So engine order value is added. So like that, which all stages value additions are measured, that thing you have to check for work in progress. That is, understand the basis of such estimates. How management is saying that in second stage, the cost becomes 350, third stage, it becomes a 370. How management is saying, how this 50, tire 50 than actual value, all these things you have to check. Then, what elements of costs are included? In different stages, what are the different elements of cost? Are they including tires value, engines value? What are the different types of things they are adding to it? Then ensure that material cost exclude abnormal wastage factors. If there are any abnormal wastage, that should not be reduced from the material cost. Normal wastage, okay, but abnormal wastage should not be reduced. You have to check that. Then for finished goods, how will you check? Finished goods, inquire what costs are included in the finished goods. When an item becomes finished, what all costs are included, you have to check. So check whether the overheads included are determined based on the normal cost and they are reasonable. Overheads are reasonable. You have to check. Overheads included in the finished goods. Then ensure that inventory is valued at a net realizable value if it is likely to fetch a value lower than the cost. That is, if you are thinking company, imagine there is a company. Let's take the case of Nokia. On like 2010, 12, that time, or 15, Nokia manufactured 10,000 old type keypad mobile phones. And it is still in stock. But now everyone shifted to touch phones. So that stock is basically obsolete. Nobody is going to buy that stock. So for that stock, you cannot show it at the cost itself was 5,000 rupees for one mobile phone. But you cannot show it at cost. Now, if you sell it in the market, people are ready to buy it only for like 2,000 rupees. So make sure such kinds of things are written down. That is, ensure that inventory is valued at a net realizable value if it is likely to fetch a value lower than cost. Then ascertain the net realizable value of obsolete or damaged inventories. So such kinds of damaged inventories, you have to ascertain its net realizable value. When it's sell in the market, what value it may likely fetch. So that net realizable value, company may put a net realizable value as 2,000. Now you have to check whether that 2,000 is correct or not. For that purpose, how will you value the obsolete or damaged inventory? Valuation of obsolete or damaged inventory. This is another separate question. Okay. So compare the recorded cost with the replacement cost. You have to check. Then examine the vendor's price list to see whether any recorded cost is lesser than the current price. See whether the cost is less than the current market price. Then calculate the inventory turnover ratio. Inventory turnover ratio you have to calculate. Obsolete inventory is revalued. It's again revalued if inventory turnover ratio is lower. You calculate the ITR, inventory turnover ratio. If it is lower, then you have to revalue this obsolete inventory once more to recheck its valuation. Then verify the correct application of lowering the cost or NRV principle. Is make sure that this cost cutting or that is this value cutting or NRV like it is written down. Make sure that application is properly done. So you don't have to overthink for over concept on this. Just understand these are the procedures. There is no concept on this. This is just procedures things. They are saying about procedure on this cases. If you are in the balance sheet inventory is written, to audit that, you have to follow this procedure. That's it. In our class, in the memorization batch or all the other batches where we detailedly we take it. In the normal batches, regular batches, we sit and take this concept very detailed, where it takes around like 10-15 hours for this one topic itself, financial statements. So, but this is a quick revision for just for your exam purposes, I'm doing it. So now let's focus on the borrowings now. Let's take borrowings. Yeah, borrowings. So how to check the existence of borrowings? Company has borrowed 10 lakh rupee from a bank. How to check whether, and in the balance sheet it is shown in the loan side, borrowings 10 lakh from ICICI Bank. So now it is your duty to check whether that borrowing actually exists or not. So for that, what purposes you will do? First, you will review the board minutes for approval of the new lending agreements ensured is authorized. That is, if company wanted to take a loan, company will do the board meeting, and the board meeting, all the directors will agree to that, and they will pass a board resolution. Or in the board level, when they discuss the board minutes, they may, in the meeting, whatever they discuss, it will be there in the board minutes. So when you read the board minutes, you can understand like this loan was been properly authorized by all the directors, all these things you can understand. Make sure the new lending, new loans you have taken are authorized. You can check that through board minutes. Then obtain independent balance confirmation for all the borrowings. Company has 10 loans from different banks and different people. You have to, for all the 10 loans, you have to obtain set independent like individual balance confirmations you have to get from that lender. Ask the lender, I am the company's auditor, I need a balance confirmation. So they will write it in a piece of paper that the closing balance on 31st March for outstanding balance of this loan is say 13 lakhs. So make sure that whatever is written in the confirmation is there in the financial statements, and same figure is there for each loan. Each loan wise you have to check. Then obtain written representation that all liabilities recorded are valid claims. Whatever liability is recorded, make sure all of them are actually valid. No fake liabilities recorded. Then agree the details of loans recorded with the loan agreement. Whatever loan is recorded, other interest, all these things, make sure it is actually what is actually written in the loan agreement and what is actually there in the loan records, both of the same. Okay. Then agree the details of lease and hire purchase creditors recorded with their agreements and contracts. When you enter into a lease, an agreement will be there, and there it will be written 10 years lease, per month this much money you have to pay. Make sure that is actually what is being done. Actually, per month the same money is whatever is there in the agreement is being paid. Same thing. Same thing with the loan also. Interest loan agreement, it is written 8% interest, and actually 8% interest are being charged, or less or more. You have to check that. That is what you're checking here and here. Then for debentures, if company has any debentures, examine the trust deed for terms and date of redemption. Trust deed you have to check if company has debentures. When the debt is retired, ensure discharge of secured asset is received. Company took a loan by pledging its land and building. Land and building pledged and 50 lakh loan took. And now after 2 years, company repaid that loan also. So when you repay the loan, that is, you took the loan by securing your asset. You gave your asset, land and building, as a security to the bank. So when you finish repaying the loan, they should give back that security, right? That is what we call discharge of secured asset. That secured asset is discharged. There is no charge on that by the bank now. Once you repay the loan, make sure that. Then completeness. Completeness means all the loans in the current year. Current year company has taken, imagine 15 loans. Make sure that 15 loans are also there in the balance sheet. That is checking the complete. All the loans, whatever the company has taken, it is coming in the balance sheet. Not all the loans, all the borrowings. So how will you check that? Very easy. Obtain the short-term and long-term borrowing schedule. Ask the company, bro, give me a schedule of your short-term loans and your long-term loans. All the short-term loans in one thing and all the long-term loans in one thing. And then schedule of borrowing means in that it will be written per month how much EMI is there and how much is paid or what is outstanding. Everything will be properly written. That schedule you have to ask from the company, and then perform this procedures. Perform these procedures. What are the procedures? Consider any evidence of additional debt obtained through minutes, contracts, etc. That when you checked these minutes, all these things, sometimes you may know about some extra loans company has taken, but sometimes they may not have shown that in the financial statements. So make sure, consider if you have got any such kind of evidence that in the minutes you have there they have talked about some loan, but you don't know whether they have actually taken that or not. When the meeting it was talked, so it was there in the minutes. So you got an evidence that some loan they have taken. So consider such a kind of evidences for any additional loan obtained, and you get that evidences through minutes or contracts. Then check the closing balance as per the schedule to the general ledger. So in this schedule, one closing balance will be there. Normally bank will give you this borrowing schedule. It's not the company. When you ask the company, company will ask the bank and bank will give it to you. So whatever is there in the schedule, one loan is there taken from ICICI. Other schedule closing balance is 10 lakh. Make sure ledger balance is also 10 lakh. Okay. Then review the subsequent transaction after the end of reporting period, after 31st March, to determine if there are any unrecorded liability, that is any fresh loan taken near to the balance sheet date. When you check the subsequent transactions, that is 31st March where only normally we will check. But you are checking April 10th or April 5th, just to check April 15 or whatever transaction is there. So sometimes you may see some loan company received on April 1st, but that loan should be actually included in 31st March. Company sanctioned, the bank sanctioned it in 31st March itself, but the money received only on 1st April. Some condition is there. because of which that should actually come in this 31st March. So check the subsequent transaction. April just first 1 week transaction you check to see whether any fresh loan something is there taken near to the balance sheet date which is should be coming in current year or which should have some effect. Just check that. Then what are the direct confirmation procedures? Directly confirm. That is loan amount 50 lakh is written in the balance sheet. Now, how to confirm that loan amount is correct? Loan amount from ICICI 50 lakh is written. How to confirm? Just to call ICICI and ask. They will give you this balance confirmation. ICICI Bank will give. That is, this company has taken this much loan, this much principal, all this paid. Current year, like closing balance on 31st March in bank book is 50 lakh. And see whether that 50 lakh is there in the company's financial statement also. So that is direct confirmation procedure. So see whether confirmation ask for all the information related to the test of debt and interest. In the confirmation, when you're asking, ask for all the interest detail, the detailed things also you can ask. Then interest rate, due date, everything you can ask, not just the closing balance. Then send a reminder for non-reply. That is, you send asked for confirmation, bank is not responding, send one more reminder. Then compare the balance as per the confirmation with the books of accounts. Confirmation balance, books of accounts balance, check whether it is correct. And if any difference is there, ask the company for any reconciliations and supporting documents. Simple. Then valuation, that is whether the amount shown in the loan amount is correct or not. How will you check the valuation? Determine whether accounting policies and methods of recording the debt are appropriate and consistently applied. What is the accounting policy company uses to record the debt? Make sure it is proper, and second, it is last year whatever policy they are using, current year also they are properly using. Consistently it is applied and you have to check. Then agree the loan balance and the loan payable to the loan agreement. Whatever loan balance outstanding payable is there, make sure check it with the loan agreement to see whether everything is correct in the terms. Then compute the interest and discount or premium on redemption, you compute and see. Then check the computation of the amortization of discount or premium. If there is any discount or premium, check the computation of its amortization. Then examine the due date of loan for proper classification of short term and long term. Check the due dates of the loan, in which date it should be actually paid, to see whether it is properly classified as long term or short term. If it is payable for more than 1 year, long term, else short term. That thing, for that you check the due date. Then review the borrowings from the personnel and ensure compliance with the AS 18 and Ind AS 24. That is, review the borrowings from the related parties. Company has taken some loan from related parties. So check that borrowings and see whether it is properly complying Ind AS accounting standard 18 or Ind AS 24. So borrowing is also done and dusted. So it is trade receivables next, and very easy, very easy. Trade receivable the same, everything just opposite is trade payable. Trade payable I'm not taking, I'll show you the chart also, so I'll give you the chart so that you can, when you understand trade receivable, same thing, opposite thinking is trade payable, that's it. So trade receivable is important, which is how to check the existence of trade receivable. That is whether the debtors amount is shown in the balance sheet. In the balance sheet, debtors amount will be shown. How to check whether that debtor actually exists? Is it a fake debtor or not? Whether he actually exists, how will we check? That is checking the existence. So check whether the controls are in place, proper internal controls are there to ensure that the invoices are not recorded more than once and receivable balance are auto recorded in the general ledger. That is, company will have proper internal controls, proper softwares or people to double check that one sale bill is not entered more than once. So make sure company has proper internal controls like that. Else what will happen? One sale, if it is automatically 2 times it is entered, it's like double entry. So double 2 times it is getting entered. So the debtor's value will get double. So that you have to check whether such internal controls, that is a point, controls. Then ask the account receivable aging report period end and trace balance as per the report to the general ledger. That is, tell the company, bro, you have 30 debtors. Okay, give me the aging report of these 30 debtors. Aging report means in a report they will give how old these debtors are. Some debtors may be 2 years old, 2 years before one sale happened, and debtor is 2 year old. Some debtor may be 6 months old. That is an aging report, age of the debtors. That we need to check. And whatever is there in that aging report as a closing balance, make sure that balance is there in the general ledger also. Then check whether realization is recorded invoice wise or not. So whatever money you are getting from the debtors, make sure it is recorded invoice wise, or if they are recording it some other way, make sure whatever it is. One amount, many bills, sometimes that you don't have to check. This one point you cut, no problem. And overthink. Then if there are any large balance of debtors for a long time, ask the reasons. If there are any large balance of debtors for the long time, ask the reasons. This is debtors. Because my handwriting is bad, I made one person to write this. So that, and here debtors it's actually. So understand this one point you can cut and this one point debtors. Okay. Then direct confirmation procedure, this same procedure you are using for trade payable. So cut, copy, paste here and there. So once you run trade receivable, it's automatically you have learned like trade payable. So direct confirmation procedure, DCP. That is how will you directly go to the debtor and confirm that the balance is correct. So you just send him a mail, simple. Contact the customers directly and ask them to confirm the amount. This has to be done for all the significant account balances. That is debtor's email. Ask the company to give me the debtor's email. Then send a confirmation request. That is, I'm the auditor of this company and this company's balance sheet. Your amount is showing as 10 lakh you owe to the company. Is it correct? Is it 10 lakh, or if there is any change in the amount? Ask him. Do this for all the bigger, significant amount account balance, like significant debtors, important debtors, bigger debtors. Then do direct confirmation procedure with the consent of the entity. If management says no, ask the valid grounds. That is, you can send this mail only after telling the entity that I'm company that I'm going to send the mail for your debtors. Ask their permission first, get their consent first. Normally they will give the consent. If they're saying no, that you can send a confirmation to all the 8 debtors, but those 2 debtors please don't send. Then ask them what is a valid reason. Then trade receivable requested to confirm the balance at the balance sheet date or date close to the balance sheet date. That is, this when you send this receivable request, confirmation request, ask them to confirm the balance as on 31st March or any date close to the balance sheet date. Then don't reveal the method of selecting the trade receivables to company till the trial balance or trade receivable ledger is given to the auditor. That is, out of that, imagine company has 100 debtors. Out of the 100 debtors, how are you picking the material debtors, important debtors? You will have a auditor will have a strategy that all the debtors above 6 lakh rupees we are considering as material, others immaterial. So auditor will have a strategy like that. Don't tell this strategy to the company first, because then company will do the fake adjustments in debtors and give it to you. If there is a bigger debtor of 13 lakhs, or he may split it as three debtors as of 3 lakh, 4 lakh, and one other amount, so that it will not be above your 6 lakh limit. So don't tell your method of checking the debtors to the company before they give you the trial balance or trade receivable. So once they give you this, then you can say, because automatically they have given. So now they cannot change. Okay. If any related party receivables are there, like related party who was yet to give some money, then review their collectability and whether they were properly authorized, and value also make sure it is at the arm's length price. So related parties sometimes will not pay because they are like related party close people. So make sure whether those debtors are actually collectible. Will we actually receive money from them? What is the chance? Make sure that, and check whether they are properly authorized. That is, to related parties we may be selling at some discount and all. So make sure all those things are properly authorized. Then you also have to check whether the transaction to the related party has been done at a arm's length price. That is, a company sell its products to the normal public at 30 rupees per product, but your related party they may be selling at some 25 rupees. So make sure whether they are selling at the arm's length price itself, that is 30 rupees itself. Make sure. If it is not, also no problem. Make sure, just check that. That's it. This is how you will check the existence of debtors and direct confirmation procedure. Then how will you check the completeness of debtors? Company had 1,000 debtors in a year, and whether this 1,000 debtors has actually been included in the balance sheet, other total is coming. That is, you have to check the completeness. That is, all debtors in the current year has been included. So to check, auditor need to satisfy himself of the cutoff procedure. So perform the following cutoff procedure. Auditor has to satisfy himself of cutoff. That is, all the debtors from April 1st to 31st March has been entered. That is cutoff procedure. All the debtors in that period should be entered. So for that, he need to perform some cutoff procedure. That is this procedure. For all the invoices issued in the last 5 days of the year, that is 26th March onwards, last 5 days of the year, are included in debtors. Check whether the goods are actually dispatched. Sometimes to show some fake sales, fake income, to get some valuation, they may in the year end the company may create some fictitious fake debtors. They may create. So last 5 days of the year, 26 March, you have to check whether all the debtors or the sale that happened after 26th March, make sure the goods are actually dispatched. So when sale happens, original sale, the goods will automatically go. Similarly, if it's a fake sale, goods will not be sent. So when you check whether goods are actually sent to that customer, then obviously it's an original debtor. So do that for the last 5 days. And payables, like small differences there here, which you can read and understand by yourself. Very simple. Then all the goods dispatched prior to the year end have been invoiced and included in the debtors. You have to check that all the goods All here it is all the goods that are sent before 31st March. If company will send the goods only after the sale is happened, so make sure if all the goods that has been sent, make sure all other invoices has actually been entered. Then no goods are dispatched after the year end is included in the current year debtors. After 31st March, whatever is dispatched, make sure it is not included in the no goods dispatched after the year end, it's included in the current year debtor, except it is the sale is in current year. Then test the invoices listed in the receivables report. Test all the invoices shown in the receivable report. There will be something called the receivables report, debtors report. In that, whatever invoices have been shown, test that. So test the invoices. Select the invoices from the accounts receivable aging report and compare it to the supporting documents. Then you have to do that. Then match all the invoices to the shipping or dispatch log. Match the invoice dates to shipment dates to see sales are recorded in the correct accounting period. Invoice what is the date, and when the goods are shipped, what is the date? Shipment bill will be there, in that what is the date, and corresponding invoice what is the date. You can match that and see whether that sale is actually of the current accounting period or not. Then assess the bill and hold sales. Examine the supporting documents. Here it is OU. It has been written by someone who is not from CA background, so some writing issues will be there, but we'll correct. Okay. Assess the bill and hold sales. Bill and hold sales means sometimes some customer will say, imagine I purchased one goods from the company and I am saying, okay, I'll pay the money also now. No, I'll not pay the money like debtor, it will be there, credit sale. And I'll say to them, imagine I purchased it on March 15th. And I'm saying it to them, bro, deliver that goods only to me on May, because I will be available only on May. So I purchased, that is billed, but the sale has been hold. So assess all those things. When the purchase is happened, but the customer is saying deliver to me the goods only after 2 months or something like that. Check that and examine it. Supporting document. Supporting document means it's invoices, all these things like bank receipt ticket, whatever the money received or not. Money received will not be there because else it will not come in debtor. Then review the process of giving the discounts and check whether they were as per the company's policy. For some customers, company may give a discount. Review the process for that. Like for example, in any case, like in our Tarun's Brainary, when on our audit lectures and all, sometimes in puja days or something like that, we may give some discount, festive discounts. But this discount can only be authorized. It cannot be authorized by me or any other person. It should be authorized by the management. Like we have a management and everyone discusses and then the discount is given, right? So that thing you have to check. Review the process of giving discounts and check whether they are as per company's policy. Company's policy is there, we can only give discounts of up to 10%, whatever festival it is. So make sure company has not given any discount over 10%. That is above company's policy, nothing has happened. So these are the things you have to check for completeness. And how to check the valuation, whether the amount of these debtors are correct. So review the process followed by the company to derive the allowances for doubtful debts. That is, it includes a consistency comparison with the previous year method. What process company is following to derive the allowances for doubtful debts? Imagine a provision or any other allowance they are keeping. What process they are doing that? What is their process? Like imagine a debtor is not paid for the last 4 months. Company has a policy. All the debtors that have not been paid for more outstanding for more than 6 months, we will put a provision of 10%. All the other debtors which are outstanding more than 1 year, we will put a provision of 50%. Like on what basis, what process they are following? You have to check that. On what basis they are saying. Then like in the financial statements, there will be provision for doubtful debts will be there. On what basis they are putting this provision? That you have to check. Like 6 months old debtors, then other like that. Then obtain the aging report of the trade receivables. Obtain the list of debtors under the litigation and compare with the previous year. List of debtors under litigation. Some debtors will purchase from us and they will file a case against us, like customer cheating, like Byju's and all. You would have seen this case. Lot of people purchase their courses and file a case because class is not good or some issues there. So obtain the list of all the debtors which are under the case, all the debtors which case is happened. So that is why they have not paid the money, all those things. And compare it to the previous year, whether compared to last year, current year, if litigation, the cases, etc. is increased, that means company is in a bad stage. So to check that. Then check if the provisions are made at appropriate rates considering the recoverability of amounts due. Check if the provisions are made at appropriate rates. That is, all the provisions are put at the correct rate, considering the recoverability. All the provisions or rate, everything is correct. Then identify the debtors which appear doubtful and discuss with the management the reasons as to why it is not included in provision for debtors. Sometimes an auditor checks, he may identify some debtors which are outstanding for more than 1 year, but management has not put a provision. So we can ask him, bro, This letter is outstanding for more than 1 year. You have not put a provision. Why? That reason you can ask. Then check whether write-off of trade receivable is approved by the proper authority. To write off a trade receivable, management directly cannot do that. So proper authorization, permission from the top management is needed. So all the write-offs are properly authorized. This is also you have to check. Hope you got a clarity in trade receivable. Same thing is there for the trade payable. I'll put the chart also along with this. So you can get it from the Telegram channel. Next is PPE. PPE, one of the most important thing here which you have to study. Then how to check the existence of PPE? Literally very easy. Yeah. Review the entity's plan for physical verification. That is in the balance sheet, it is written PPE is equal to 50 lakhs. So how will you check whether that PPE actually exists or not? That is checking the existence assertion. So first you will do it through physical verification. So what is entity's plan for physical verification? That is normally you will go and do the physical verification first, and entity also should do a physical verification for their inventory, PPE, whether everything is correct or all these things. So physical verification, are they doing it by own staff or by third party, and are they doing it annually or once in 2 years? Like that you have to check once in 2 years or 3 years, whatever it is. Then examine the evidence of supervision of those performing physical verification. Whoever is performing the physical verification, once they finish the physical verification, during the physical verification, there should be someone to supervise whether everything. So you have to get the audit evidence that there was someone to supervise and get the evidence of that supervision for physical verification. Then obtain the PP's physical verification report backed by the working sheet and perform the following. When you do the physical verification, you will get that during the physical verification you will have a working sheet, and once you finish it you will have a physical verification report. When entity do the physical verification, obtain that and then perform the following. Assess if all the PPs are properly tagged and has identification marks. Make sure if company has 15 property, plant and equipment, make sure all of them are been properly tagged and has identification marks with the like number or something written to the PP in machinery 1, machinery 2, like that. Or do they have a properly tag with other weight, other years, all these things. Then reconcile the PPE that is physically verified with the physically verify with the fixed asset register. That is physically you can go and verify. So here till here all the verification was done by the management. We are checking what our management has verified and all the reports from that. But here you can also, auditor can go and physically verify with the fixed. You can do the physical reconcile PP, that is physical verification with the fixed asset register. When you do the physical verification, you can have the fixed asset register in your hand, and whatever is shown in that, whether it is there physically, you can go and verify. So verify the PP's addition till the physical verification date is updated in the fixed asset register. Verify that PP's addition till the physical verification date is updated in the fixed asset register. So verify here, just verify that PP's addition, all the new PPs that was bought in the current year, make sure all of them has been added to the fixed asset register. That is it. Then verify any discrepancies found in the physical verification and see the manner in which they are dealt in the books of accounts and financial statements. Verify any if during the physical verification, the fixed asset register, it was written 10 machinery, but when you verified only 9 machineries here. So a discrepancy you found. So verify any discrepancies found in physical verification and see how they are dealt in the books of accounts. It's if it is you doing or management has done the physical verification, in that they found out any discrepancy, see how it is properly accounted in the books of accounts, whether that verification have they reduced that one asset or like whatever it is. Then how will you check the rights and obligations of PPE? That is all the PPE which is shown in the balance sheet should be in the name of the company. That is, company should own that. Then only it can come in the balance sheet. So how will you check that rights and obligations? All the PPE purchase invoices are in the name of the entity. Check that. This is check that all the PPE purchase invoices, check all the PPE purchase invoices, purchase bills you take of the machinery, and see that it is in the name of the company that entitles the legal right of ownership to the entity. Entity's name it should be, and it should, so that it will give the ownership right to the entity. Then for additions to land and building, that is new additions bought in the current year, check the sale deed to verify whether entity is the legal owner. For all the things land and building we have bought, the sale deed will be there. So check that to see that it is in our name itself, company's name itself. Then for all the immovable property held at the balance sheet date, verify the original title deeds. Land and building we hear, on all the other things, see the title deeds of that, immovable properties. Then immovable property given as security for borrowing and original title deed is not yet not available. There are some, the company has 10 land and building. Out of that, 2 land and building company has given as a security to the bank. The title deed is with the bank and company has taken a loan. So in that case, how will you check? Request the management to obtain a confirmation from the lender. Tell the manager, bro, I need to check these 2 PPs which you have given as security. So go to the bank, obtain a confirmation from them. That is in the bank's letter pad, ask them to write and give that this PP is with them. That is, obtain the confirmation from the lender that they are holding the original title deeds as of immovable property as security. Ask the bank to give a confirmation that they have the original title deeds of these 2 properties and it is in the name of the company itself. Then verify the register of charges to assess whether any charge is created against the PP. When you verify the register of charges, you studied in law, right? That thing, you will get whether any charge is created against the PP. Then how will you check the valuation of PP, whether the amount is correct? Auditor should verify that entity has entity has charged the depreciation on all the PP except land. Make sure all the PP depreciation is charged. Then depreciation method used reflect the pattern in which assets future economic benefits are expected. That is, the depreciation. Imagine company is expecting that current year company bought a machinery, but future it is expecting every year the performance of machinery goes down. So slowly machinery's capacity, the ability, the function will go down. So use WDV method for that. But other cases, if every year it will function perfectly till then use straight line method. So make sure the depreciation method is as per the expected future economic benefit from the machinery. Then PP. Then whether management has done impairment assessment as per AS28 also you have to check. Then how will you check the completeness? Whether all the PP, company has 50 PP, whether all of them has been come in the balance sheet, you have to check. How will you check the completeness? Verify the movement in PP schedule, that is opening balance plus addition minus deletion is equal to closing balance. Make sure this one. That is all the opening balances plus all the additions, new machineries bought in the current year, new PP minus the machinery sold is equal to closing balance. Do this reconciliation and see. Then that is, you can check, they would have already done that. Then check the arithmetical accuracy of PP schedule. That is PP schedule, one thing will be there. Check all the, whether the calculations, all the things, depreciation calculation rate into 15%, all those things are correct, you have to check. So for checking that, for checking this arithmetical accuracy, first you have to tally the opening balance to the previous year's closing balance. Last year's whatever the PP's closing balance is, make sure, first step for tallying this, first step you need to do is last year's closing balance, because here what I said, opening, addition minus deletion. So you are checking the arithmetical accuracy of that PP schedule. So first you verify the movement in PP schedule, for that is opening balance, all these things. So second step is check the arithmetical accuracy of this, that is whether this calculation everything is correct, and you have to check. For that, first calculation you need to check is previous year closing balance is correctly brought forward as current year opening balance. First thing you have to check. Then for addition, so opening balance is correct. Then for addition, how will you check? For deletion, how will you check? So opening balance we checked. So additions, what you will do? For material additions, like significant machineries, important high value machineries, verify if the expense meets the AS10 criteria. Then spare parts, standby equipments, standby tapo. Oh my god, this is what happens when you ask your wife to write the things. Okay. Spare parts and standby equipments and servicing equipments. I had these notes with me, but my handwriting is bad, so I asked her to rewrite. Okay. So then spare parts, spare parts and standby equipments and servicing equipments will be there. Company will have a machineries, lot of spare parts, then standby equipments, then servicing equipments, all these things will be there. So make sure for checking that, for checking the addition to that, you have to check for whether whether it is recognized as per AS10 when they meet the definition of PP, else it is inventory. If these things, spare parts, standby equipment, servicing equipment, if they meet the definition of PPE, then you have to recognize it as per AS10, else it is recognized as per inventory. Then ensure the day-to-day servicing cost is not recognized as PPE. Day-to-day servicing cost of machinery will be there. Don't recognize that, capitalize that, don't capitalize that. Then those costs are not added as additions. Then to verify the date of addition, on which date the addition happened, you need to check that. For that, you can check the purchase invoice or you can check the installation certificate. Then verify whether PP's additions are approved by authorized personnel. That is, new PP bought is as per the proper permission of the top management. Then verify whether proper internal process were followed to finalize the vendor for procuring PP. Company wanted to buy a machinery. So normally, what company should do? Company should invite tender from all the suppliers, and whichever the lowest cost we are getting, lowest discount, the best quality, we need to buy from them. So that thing you have to check. Verify such kind of a proper process was followed to finalize the vendor. Because in some companies, imagine I'm the management, what I will do, I have my friend who is running this machinery shop, so I'll buy the machinery from him. Even though it is at high price, I'll buy it from him because he's my friend, or sometimes I'll get a commission. So to avoid that, auditor has to check whether management has properly invited all the tenders, quotes, everything, and only the lowest thing is they have taken, or the best quality. Then for deletion, so here in the PPE schedule, first we need to check the movement in that. That is, what was the opening balance, what was the closing, additions, all this. Then you need to check the arithmetical accuracy of PPE schedule. So for that, first opening balance we checked, tally it with the previous year. Addition now we checked, now deletion we are checking. So here you are getting the structure proper in your head, so you will not forget. For deletions, understand the reason for deletion and the manner of disposal. Why that machinery has been deleted. Last year 11 machinery was there. Current year it is not in the balance sheet or register. Why it has been deleted? Is it because it got damaged, or what is the reason? Understand the reason and how it has been disposed of, whether it has been sold to someone or whether it has been like completely dismantled and scrap. All these things you have to check. Then obtain management's approval and discard note authorizing the disposal. Company has a 10 machineries. If a company want to discard one, remove one machinery, then proper management approval should be there. And they gave this approval through a discard note. One approval you have to check, and after that, that machinery you are selling it out, or you are dismantling and removing it out on scrap. So discard note will also be given. You have to check that. Then verify the process for sale of discarded PP. If discarded PP is being sold, and in what process we are being selling it. Sometimes company has a PP and the useful life is 10 years, but they used it for 5 years. So now the realizable value, if you sell it in market, you may get to 5 lakh rupee. But company sold it to someone for 2 lakh rupee. Sometimes that may be managers, father-in-law or something, kind of a fraud. So to avoid that, in what process they are selling it, you have to check. Proper OLX or wherever they are putting it, and proper high price itself, actual value, selling value, second-hand value they are selling, you have to check. Then verify management has accurately recorded the deletion of PPE, gain and loss in books of accounts. All the gain and loss when you sell PPE, make sure it is properly recorded. So PPE is also done and dusted. And in PPE and other chapters also, guys, in your study material, this chart is just if you're planning to skip it or all these things, you are studying it. But along with that, you have to refer with whatever material also you are using. Just basic 16 marks when a paper is coming, at least 10 marks paper you will get it from this chart itself, or at least 8 to 10 marks you will get. But other marks, it may come from all the disclosures you have to see it from your book. Disclosure you have to study, like the disclosures are there, which you can see it from your book. But study with the chart first, then if time is there, then only study the disclosures. Disclosures also a 4-mark question can come. Then disclosures plus all the other things I have put everything in the chart, but except a few things which you can search with your book, that is for like trade receivable, these things, following points. This one point you can check. This is very easy. When you read, you will understand. I've made the tough points on the chart, which is very tough for you to understand. So learn all those tough points from the chart, and other things, if there is extra something, you can learn it from the book. Like all the disclosures, you can learn it from the book. Then in case of PP, only I'll show one thing, which you have to learn from the book. This one. That is a measurement and recognition. That is a cost of an item of PP recognized as only if the future economic benefits will come. You learned it in the accounting standard, right? That is why I have not put in. Then what are the elements of cost? The purchase price, import duties, all these things. These two topics you have to learn from the book. Okay. Then it is going to be intangible asset. Intangible asset, the software, all these things. So existence, how will you check the existence of intangible asset? Verify whether the intangible asset is in active use for production or supply. Company has some intangible asset. Make sure company is actually using that intangible. Company has a patent. Imagine Maruti or Kia and Hyundai. I think Hyundai has the patent of Kia, or Kia has the patent of Hyundai for their design and all these things. So those designs whichever they are having, make sure they are actually using that design for their production. Is it in active use? Those things. Then for intangible asset, not in active use, if you are not using that, then deletion recorded in the books of accounts and amortization ceased beyond the date of deletion. You have to check. If they are actually not using it, make sure the deletion is there in the books of account, deleting that asset, and its amortization has stopped after the date of deletion. You have to check, because in PPE it is called depreciation, and intangible assets it is called amortization. It is opposite. Then for checking the existence of software is an asset, right? You can verify whether that software is actively used. The company has a software, whether they're actively using it. Verify the sale of related goods and services in which such software is used. For what purpose? Imagine I am a cloth manufacturer and I have a software for designing the clothes. So what? Verify, check whether I am actively using it, and also see What are the goods and services I am selling with the help of software? Like from software, I'm designing and I'm selling my clothes. That are the goods. We can check that. Verify the sale of that. Verify the sale of that goods. Then that shirt, whose design I have created with that software. Then only I can know whether that I'm using that software. I created one design with the software and same design I printed one shirt and sold. So when I verify the sale of that shirt, then I can understand, okay, this shirt has been sold 1,000 units and this design was made by this software. So this software is in active use. Like that I can conclude. Then existence of design and drawings. For that, verify the production data to see if products for which design or drawings were purchased are actually produced and sold by the entity. I am a clothing manufacturer and I need some designs. So I purchase some designs from some people, external people. So that design is an intangible asset for me. So now I need to check whether I am actually using that design in my production. Simple. Then how will you check the completeness of intangible assets? Company has a lot of intangible assets. So we have to check whether every intangible asset is there in the books of account, in the financial statements. How will you check that? Verify the movement in intangible asset schedule. Like PPE asset schedule, PPE register, we'll have a intangible asset schedule. So verify the movement. That is opening balance, like how many intangible assets we had, what is opening balance, check its additions, check its deletions, same like we learned about, same thing. Then tally the closing balance to the books of accounts. Then check the arithmetical, same point we learned here, same point. Intangible asset schedule, check the arithmetical accuracy, then addition, deletion, everything is there, same, cut, copy, paste. Check the arithmetical accuracy of movement in intangible assets, calculation. So for that, first opening balance, we are doing this. Then additions, for material additions, verify whether expense meet the criteria of AS 26. Then no intangible asset arising from research is recognized. Expense on research should be recognized as expense when it is actually incurred. That there is any intangible asset arising from research is no intangible asset which is coming from research is recognized. Make sure that then expense on research should be recognized as expense when it is actually incurred, because company will spend research expenditure to create some designs or research to find designs. Then verify the date of use of intangible asset. Check the certificate or the report. On from which date you are charging intangible asset, you have to check the certificate or report. This is for amortization purposes. Then verify whether additions are approved by the appropriate personnel. Additions, new intangible assets are authorized by appropriate personnel. Then verify whether proper internal process is being followed to finalize vendor for procuring intangible asset. You wanted to buy a design, so don't just buy it normally. Just invite the tender. Lot of designers, let them give the design, whichever the best design, whichever is the lowest cost you need to buy. That is a process for finalizing the vendor, the seller. So make sure such kind of a process is followed. Not like company or a friend they buy a design. No. Then for deletions, how will you check? Obtain the management's approval and disposal note authorizing the disposal. That is one intangible asset is deleted, then management need to approve it and they need to give a disposal note. That there it was discard note, here it is disposal note. Verify what is the process for selling that intangible asset, discarded asset, how they are selling it. What is the process they are following? Are they listing on OLX or are they showing ad or what is the process? Then verify the management has accurately recorded the deletion and gain and loss. Same thing. They obtain management's approval, discard note, here there it was disposal note. Then what is management's process for deletion? Same process here also. Then verify management has accurately recognized a loss or gain on deletion. When you sell the intangible asset, you may get a gain or loss. Make sure that is properly recorded. That is here also, it is said. Then how will you check the valuation of intangible assets, whether the value of intangible assets is correct? Verify that the amortization is charged on all intangible assets. Make sure, like depreciation on PP, make sure amortization is charged on all intangible assets. Then amortization method used to reflects the future pattern of future economic benefit. Like there I told you, we need to give WDV if we are expecting the benefit to go down, asset or the benefit to go down, and if we are expecting same benefit every year, then straight line method. Similarly, do that for amortizing intangible assets based on their expectation of future economic benefit. Then whether management did impairment assessment to determine whether intangible asset is impaired, whether they have done the impairment assessment. Then how will you check the rights and obligations? Verify that all the expenses and invoices and purchased contracts are in the name of the entity that entitles ownership. Same rights and obligation, how will you check? All the intangible assets which company are showing in the assets, make sure that is in the name of the company itself, or ownership, similar to PPE. So now we are done and dusted with intangible assets also. So hope you got a clarity on all the balance sheet captions. Now only to like provisions or loan is there, which is very easy. You can learn it directly from whatever material when you read, you'll get. But these are the complicated areas which we explained, all the important areas we explained. And then P&L captions are also there, which I'll upload one more video soon itself, so that I don't think P&L is very tough. Normally, people easily read and understand, because now when I taught you all these things, you got an idea about what IC is meaning with their sentences, right? How to read their sentences, how to vouch everything. So when you read the P&L captions yourself itself, you will get the idea. But anyways, I'll also upload one video in the soon, like this week itself. I'll upload one more video for P&L captions also, which will be, if you want, you can watch. But that is not needed, bro. Directly, when you understand this much, when you read it from the book, you will understand easily. So these notes are directly available in the Telegram channel, and please join the Telegram channel and be there, because I'll upload this kind of chart notes for the P&L captions also. If I get time soon, I'll definitely upload. Anyways, I'll upload 100%. Then that's it. So this is all what I have to say. So hope you got value from this video. If you got value, just give it a thumbs up, and just write what you feel in the comment box. Like quickly, in like around 1 hour, we finish this video, right? All the tough points in this chapter is done. So if you are planning to skip that, don't skip it. At least study what this chart and go. Like at least 10 marks paper, you will get it from this. 15, 16 marks is what comes from this chapter. 10 marks are you will get it from this. Then disclosures you can learn from your book. That only after learning this. After learning this, if you have time, then only go with disclosures. Okay. So this is all what I have to say. If you want to see what topic do you want next, write it down in the comment box. I'll make a video on that. And in the channel Bank Audit, the toughest chapter is highly decoded. Conceptually, it is written there. You can go and watch, because it is a subject chapter which you have to learn like DT and law, like I said, not like audit. So the process of learning that I've mentioned it, then automated environment, everything is there in the channel. So that's it, guys. So see you tomorrow with another video. That's it. Bye bye.